Thank you, sir. So I'm also thankful to Suchdev Associates that they keep doing the wonderful work and allow me to be the mouthpiece. Without them, without the team, I really could not get all the time to be with you all people. So there's just a placeholder slide for today's session, because going forward later, when you see the presentation sometime in future, you will think, "Kis din kya hua tha? When did this happen?" So this is just a placeholder slide to remember that on 5th of April, because see, this is very important. What I'm trying to say today is my opinion as on 5th of April. It can change today evening, because new information keeps coming and better understanding also keeps coming. So this is just a basic introduction of myself. You all know most of the things, and Anbu sir has said more than what is actually true. I'm not really that big a person or that knowledgeable, but there are some things that I want to tell you about. That is that, as I said, I'm part of the Tangible Assets Board now, yes, but with that, I'm a registered valuer under Companies Act. I'm registered valuer under 3484 Land and Building and Plant and Machinery. I'm registered valuer under Black Money Act. I'm registered valuer under Section 132(2) and 132(90), which is investigations for land and building. And I'm also a registered valuer under Section 504 of the Income Tax Act, both land and building and plant and machinery. My contact details are here, and I would encourage you all to stay in touch with me. If there's anything, you can just ping me and we can decide the time to speak or come to a video meeting. If you're coming to this side of the country, please feel free to ping me in advance, and we can meet and we can share some personal moments together. We have the Lion Resort, Lion Abode in the country. We have the only Somnath temple. We have the Dwarika. We have the Sasangir. We have Dev. All these, for all these, you have to go through Rajkot only. So please be my guest. Come down to this side when you can. A small disclaimer. Views presented are my own, and these are my interpretations and may be incorrect. This presentation will be shared with Anbu sir, and you can share it with others. This is it's a copyright property of the presenter, but you're permitted to freely share it as long as you do not modify it in any way, and changes or corrections, if any, must be brought to the notice of of myself. You can write at nilesh@suchdevs.com. Now, why this session? So, as we all know, that this quandary of the situation where we are every day wondering, kal kya hone wala hai, what's happening, what's going to happen, and not only just what's going to happen, how is it to be done? That is one reason we are discussing this. But more importantly, as I said, we want to speak with ourselves. We want to learn, and such sessions like this give us an opportunity to rethink things, and that helps. So on that, I like this joke. I don't know if you will be able to hear the Swamiji. I'm a big fan of him. He's absolutely the best in the world. But what he's trying to say is, it's me talking to me, and so I don't know if you can get the voice. Let's just try it.
Me is only sitting as me in you. These two only is talking to each other. Understand, I can only talk to me and give my understanding. I cannot talk to anybody else and give my understanding. The me resides in this as me, is residing in all of that as me. So that me, through this me, talking to me.
A lot of nonsense, but I like it.
Sir,
Yeah.
Sir, fortunately or unfortunately, this fellow is from our place, and most of the people here in Puducherry knows him.
Okay. I believe you. So I should continue only in English, right? Is that what you're trying to say, sir? I didn't get you. The voice wasn't clear.
No, sir, I was telling you that This Swamiji is from our place.
Yes.
So
Yes,
many
yes.
of us know
Yes. Yeah. So, I mean, no digs at any of this thing, but I just thought it was contextual to me talking to you.
No issues at all, sir. No issues. I'm just telling you, that's it.
So start with the context of the act. This is where it all starts. And the section 5 and 4 of the Income Tax Act, which is notified in 2025. That's where it all starts. So just let's do a quick real reading of the act. What are the operative parts? So the Income Tax Act section 5 and 4, 1 says that the principal chief commissioner or chief commissioner or the principal director general or director general shall maintain a register of valuers. Shall maintain a register of valuers in which names and address of person registered under subsection 2 shall be entered. Now, what is subsection 2? Any person possessing such a qualification for valuing such assets, class of assets, may apply. This is very important. So the Income Tax Act itself says that possessing such qualification for valuing such class of assets may apply. This is very important going forward when we try to look at the other parts of the acts and rules. He may apply and for getting registered as a valuer. And then how it will be done, and the valuation report shall be prepared in the format as specified, which is fine. The only other section which is there in the Income Tax Act, which largely speaks about valuer, is the preceding section, which is section 5 and 3. Section 5 and 3 only says that where a matter is to be represented by SSC to the department, and if it is relating to valuation, then it may be done through a registered valuer, unless that deposition requires that the person must remain present in person. Other than that, it can be done through the registered valuer. So this is, in my opinion, secondary, and it's a continuation of the old act only. In fact, I'm quite surprised. There's somebody whose mic is on and is in a vehicle. So if that person can just mute, that would be very kind.
So Nilesh sir, I think you got muted because I was trying to mute all. Please unmute it.
Okay. So am I audible? Yeah. Am I audible?
Yes, sir. Yes, sir. You're audible.
Yeah. So the Income Tax Act, the new Income Tax Act, basically has not really evolved, in my own opinion. The large part of the obfuscation, duplication, repetition, the cross references in the Act, the confusion and ambiguity has been retained the way it was. I don't know if this was a fantastic opportunity, and I genuinely feel that it's an opportunity lost, because the complexity of the language, the highly legal way in which the Act has been, the original 1961 Act was written and then amended over and over and over, that has been consolidated into a single Act, but it has really not evolved to make it simple, modern, straightforward language, which is not ambiguous and is very clear for interpretation. Unfortunately, that has not happened. It's a big opportunity lost, in my own opinion. Now, coming to income tax rules, there are Rule 2, 4, 6, 7, 8, and 9, which are important, which talk about the application, qualification, charging of fees, and removal of value, the names from the register. 4 rules which are very important for valuers. And of course, there's form number 169, which is the application form, and form number 170, which is the reporting format. Please don't think that these are the only sections. You must read the Income Tax Act and you must read the income tax rules in toto. In fact, I have already in the past shared a document which must have reached you, where I have enumerated all the various sections under which valuations are required under the Income Tax Act, and who shall do those valuations, and what shall be the basis of those valuations. Meaning to say, is it fair value, is it fair market value, is it market value, is it value, is it stamp duty value? What is the value that is being this thing, and who will do it? In most of the cases, of course, you must understand that it's the DVO, it's the Department Valuation Officer who does the valuation. Sometimes the value is just taken directly from stamp duty and there's nobody does the valuation. So if you look at the Income Tax Act and the rules, you will realize that in 95% of the cases, registered valuer has no role to play in arriving at a value when it is related to, let's say, land and building or plant and machinery. Plant and machinery, there are still more instances where, but of course the requirement is much lesser, but a registered valuer is supposed to give a report. But in land and building cases, in most of the cases, it will be the stamp duty value. Let's say for Section 50C of the Income Tax Act 1961, which is of course now changed, the section is changed. But so for so many sections, you are talking of the land and building assets. Now see, try and understand that land and building and plant and machinery are not the only two this thing. But I've taken a look at the participants mix, and 98% of the participants are either from land and building or plant and machinery or a mix of these. Of course, there are some participants who are coming from financial assets and other asset classes. And I genuinely take convey my apologies that if your sections are not being represented sufficiently in this session. But these are the operative parts which are very, very important, and we'll try and look at them. So what are the categories of valuers? So the categories of valuers under the new rules are the same as they were in the Wealth Tax Act 1957. So Section 34AB categories are largely the categories that are not largely, they are in entirety. They are the categories that were in this thing, except of course category 11, which is any other assets. And now you're talking of any other assets, but are there any valuers today who are registered for, let's say, works of art, category 9? And within works of art, it's not if I'm a category 9 valuer, and if I'm from the archaeological department, let's say, can I value a painting? No. I need to be from the museology to be able to value a painting. So within works of art, also there are so many subcategories, but there are virtually no valuers in India who registered at the works of art category under the Wealth Tax Act. So, and then adding just an 11th category, it must be relevant, I'm sure, but I'm not seeing the point at this point of time, but that's okay. But most of us are basically land and building and plant and machinery valuers. Some of us are into both the categories. So we will largely look at those parts. So first, what is the registration process? Let us try and understand that, which is given in section 246 and 247 together. When you read the section 246 and 247 together, you will get a clear idea as to what is. So I'm just trying to put it in a very kind of graphical and simple manner that for a valuer or an aspirant who is interested in getting registered under the new Income Tax Act, maybe there are two categories, that he may either be registered under Section 34AB of the Wealth Tax Act, or he may not be registered under the Section 34AB of the Wealth Tax Act. So for both of these scenarios, we will look at, so if you are registered under the Section 34AB of the Wealth Tax Act, what are you supposed to do? You have to fill up the Form 169 before 30th September 2026 and do not have to pay any fee. This is what is written in the rules. The fact is that such a portal, this is supposed to be done online, purely online. There's no physical backup. It's a purely online process, and the portal is not open yet. So anything more than that, okay, the Form 169 is already given in the income tax rules, annexed with the income tax rules, and it gives a lot of details. But then there is also a clear indication in writing by the government saying that they will relook at the concerns that we have all posted with the form, and they will make amendments before actually publishing it, make amendments as may be required. So as of date, we can only say that the form number 169 that we see is an indicative and not 100% correct form. It has got some inconsistencies, and it's got some incorrect language, and it's got incorrect wordings, which we hope that before the portal opens will be removed. But we don't know for sure. We don't know anything for sure. But today we know that when the portal opens, we have to apply under the Form 169 before 30th of September 2026. So 6 months we get, and we do not have to pay any fee if we are already registered. For the ones who are not registered, they have to meet the qualifying criteria. What is the qualifying criteria? We will look at that next. Fill up the Form 169, pay 10,000 rupees, and become a registered. So if you are like me, operating in, say, land and building and plant and machinery, then you have to pay individually for both 10,000, 10,000, and get registered. But then there is a third class of assets or valuers also, and that is the ones whose 34AB application is pending as on date. Right? Before 31st March, you had already applied for registration. And they could not say no, saying that, no, new income tax act is already coming or is being operative, you cannot apply today. Even on the last day till the office was working, you could have applied. And if you are into one of the very few people who have applied, then in that case, what is it that you have to do? You have to meet the new qualifying criteria and no further fees to be paid. And your application will be seen as having filed fresh, and will be processed, but you will not be required to pay any fee. So only discount that you get is you are not required to pay any fee. Again, you also will have to fill up the form number 169, but since you've already paid 1,000 rupees processing fee or the registration fee or whatever, which was this thing to be paid, you will not be required to pay any more fee. But suppose under the circumstances that you are not meeting the new criteria, then you can make an application and your fees of 1,000 rupees will be refunded to you. But for all of these three categories, whether you are registered, whether you are unregistered, or whether you're in the process, yes, no, or maybe, all of you have to go through the appear for the exam, which is to be declared, which is not declared as on date. And please don't ask me that what will be the syllabus, what will be who will conduct that exam, the only thing we know for sure is that that exam will be online. Meaning to say you will have to go into some center and you will have to appear for an exam similar in format to what you did for IBBI. But there is no indication that it will be the IBBI exam. And we have absolutely no reasons to say that, but though it is not declared, but it will be the IBBI exam. We don't have any reason to say anything like that as on date. What comes out, we will know the day it comes out. Anybody who says that, yes, I have got confirmed information, I genuinely feel that they are saying more than they know. Do not believe anybody. So let's look at the rule 246 and 247, and then we'll again look at the qualifications again. So what is the application process? And our application for registration as a value under section 5142 shall be made in the form 169 and shall be verified in the manner specified therein and shall be accompanied by a non-refundable fee of ₹10,000, as I said before. When an application for registration is pending, no further fee shall be required to be paid. And no further payment of fee shall be required to be paid. We have seen this. Here, the important operative parts are an application under section 514 in the manner specified therein. So it's very clearly saying that Form 169 is the operative. What 169 says is what you will have to follow. So we have to wait for 169 to come online. That will decide. So because there are a lot of issues within the interpretation. Unfortunately, Form 169, Section 24, Rule 246, Rule 247, both of these have got a lot of inconsistencies, and unfortunately, they have not numbered the sub-rules properly. If you have numbered, because what happens is, if I say this and this or this, there are two ways it can be interpreted. It can mean this and this, or this, or it can mean this and this or this. And both are very different. And that is exactly what is happening in Rule 247. If you read it once, twice, thrice, 10 times, 20 times, 50 times, you will realize that there are a number of ways it can be interpreted. And that is a problem. So the qualifying criteria that I'm going to say may be 100% correct, or it may be 99% correct, and there may be a 1% difference because of that this and this or this. And we will look at that. Second sub-rule says, where an application for is pending, immediately before the 1st April, it shall be considered if it's filed under sub-rule 1. So again, it's going to sub-rule 1 only, and no further fee shall be required. Let's look at the third subsection. It says that in case any person has become ineligible. I was eligible before, so I applied. But the new rules, there are minor changes. So I may become ineligible in view of the qualifications specified in provisions of the Rule 247. And if I have become ineligible, then the fees paid can be refunded on an application. So don't believe that while it may sound and seem like that it's a 100% copy of rule of the Wealth Tax Act, but it's not a 100% copy. It's a close to 90% copy, but it's not a 100% copy. And then what does the sub-rule 4 says? And this is the most important one, which comes to people who are already registered under the Wealth Tax Act. What does this rule say? It says, where a person is already registered as a valuer under Wealth Tax Act and holding a valid certificate of registration as on 31st March, he will continue to be registered valuer under subsection 514. Read this again and again and again. He will continue to be registered under registered valuer under section 514. That means even before you make that application in Form 169, you are already a registered valuer under section 514. And that is why, if any of you noticed in my bio, I said, I am a registered valuer under section 514, both for land and building as well as plant and machinery. I was expecting somebody to unmute themselves and say, boss, how did you get registered when the Form 169 is still not available also? So I call myself to be the first registered valuer under section 514 in the country, because I've been using this title since 1st April 00 hours. So I say that I am the first registered valuer. I got registered the first. Try and understand this, and after the session is over, change your bio to a registered valuer under section 514. You are all, congratulations. All those who hold 34AB license are already a registered valuer. That part is done. Let's go ahead. But that he is required to update his details by filing application. I'm already registered. but I'm required to update my details by filing application as defined in sub-rule 1 of the by the 30th September. I'm given 6 months to file that form to update my details. Carry no doubts. It says very clearly, nowhere it says that is required to meet. See, that brings inconsistency, because section 514 very clearly says, and that is the act, and these are the rules under the act. The act says that will be required to meet the qualifying criteria. Here, it does not, it defines the criteria that the criteria is you are already registered. That's the qualifying criteria under this. So if you are a registered value under 3314, whether you are falling into the 10% inconsistency with the old Wealth Tax Act rules does not matter. You were a registered value under 3314 under 34AB. You continue to be a registered value under 514. Right? But that he is required to update his details by filing application as referred in sub rule 1 by the 30th of September. And in such a case, upon filing such application, the registered shall be granted. Registration shall be granted. So today, I don't have a registration number, but the day I fill up that form, subsequently, I'm not saying the same day, but subsequently, a registration number will be granted to me by the concerned authority in section 514. If the application is complete in all respects, what are the if? The only if. If the application is complete in all respects. That's the requirement. The only if is this. There is no other if. There is no if that I have to be IBP registered valuer. There is no if that I have to be a member of the RVO, registered member valuer of the RVO. There is no requirement if I have to meet the new qualifying criteria. If I am incorrect, if you disagree with me, you're welcome to tell me now or when in the question and answer session, which we will do soon. But this is very, very important. And this is one view which I have not seen coming largely from anyone. Next section says, for the purpose of sub-rule 4, the application may not be accompanied with any fee, which is okay, fine. So there's nothing major about that. But so we obviously, when I continue to be registered, this thing, they could have charged me a fee just for verifying that form, but they're not charged, which is fine. So, and then subsection 6 says that when a person is registered as a valuer under section 514, this is very important. See, next section says, after the section 5, I'm not supposed to pay any fee. Okay. Then it says, where a person is registered as a valuer under section 514, he shall be required to qualify in an examination. Meaning to say, who? Whether it is yes, no, or maybe. Which one? Which category? No, all three categories. Because where a person is registered as a valuer, so post your registration, you are required to qualify in an examination within a period as may be specified. Now that period can be 3 months, 6 months, or a year, or 2 years, whatever. I don't know. Will be notified. Today as on date, there is no information. We all have reasons to believe that maybe it will be at least 6 months, because nobody is going to ask you that today evening you have to qualify in an examination. They will notify some procedure, they will notify some exam and which you have to clear. And there would be some kind of some qualifying marks which you have to achieve. So as may be specified in this behalf by the central government by notification. It's very thing. It will be notified, right? So it's not notified as on date. We don't know anything. Next section, sub rule, where a person fails to qualify, important, where a person fails to qualify the examination as per sub rule 6, within the specified period, the registration under section 514 shall stand cancelled with effect from end of such specified period. What does that mean? Suppose I'm given 6 months, and in the notification it said that 6 months from the date of your registration you have to qualify. Now Where does that 6 months end? Does it start from 1st April? Because I was already registered on this thing, though I was not given registration number, but I continued to be. So does it start from 1st April? Or I filled up my form on 30th September, and let's say 1st of October, I was given my registration. Does it start from 1st of October? We don't know. Maybe the notification will bring in some more clarity on that, but as on date, we don't know. Anyways, so this gives me 6 months. So within those 6 months, I try to attempt for that exam once in, say, after 3 months. And I fail it. Can I appear again? Or what is the time period between the 2 exams that I can take? No details known. Don't ask me these questions. Nobody knows them as on date. So all these things are the gray areas which we have to live with as on date, right? If anybody says anything there, don't believe them, because that's not official. There's all conjectures, and we don't want to make conjectures. We will look at conjectures when they come. We'll look at things as they come, right? Now, Rule 247 qualifications for category 1 and category 7. We'll look at the qualifications for these 2 categories. Why are we looking at them separately? If you do a reading of the section 247 and Cat 1 and Cat 7 or Cat 6, let's say for financial assets, that financial assets, of course, the requirements are fairly different. But if you look at section category 1 and category 7, they will, to you, on the first reading, sound like they are the same. But there are some nuances which make them different. They were different also in Wealth Act, but unfortunately, that clarity has not been brought in today. And to believe that it will be interpreted the same way that it was being interpreted in the Wealth Act is wrong. So, what are the qualifications for Cat 1, that is an immovable property? There are 3 criteria: education, experience, and income. So, let's look at all 3 of them. So if you're a graduate in related technical field, maybe you're architecture or engineering or let's say town planning, you're a graduate in any of these fields, then the experience that you require is 10 years experience in related field and gross receipt of minimum 1 lakh rupees in 3 of the 5 preceding years. So you have an experience of 10 years, yes, but in the last 5 years, of the 5 years, you have to meet this criteria in 3 of the 5 years, minimum gross receipt of 1 lakh rupees in 3 of the 5 years. That's the requirement in terms of if you're a graduate in the related technical field. But suppose if you were in a job, then 10 years job in related field and resigned is the experience requirement. You should have resigned, you should have had 10 years of job in the related field. Earlier, the department used to interpret it slightly differently because these wordings were not very clearly written. That suppose if I have a 10 years experience, of which I've done 6 years of job and 4 years of my private practice, the department used to, most of the CCITs used to consider that as a valid 10-year experience. Because there is no specific, this thing that you should have a 10 years job experience, that requirement was not there. Now this complication is coming. So which means that if you do a 9 years job and leave it, then you'll have to still wait for 10 more years of private practice and 19 years before you really become qualified for registration. This is the clarity that is given in the new rules. Now we look at if you are, what if you're a postgraduate? So in that case of postgraduate, you can be a postgraduate in real estate valuation, or you can even be postgraduate in, let's say, any section of architecture or even engineering, and those all are valid as a postgraduate degrees. In case of real estate, that is immovable property, don't mix it up. Don't confuse this with plant and machinery. The requirements there are slightly different. So in that case, you should have 3 years work experience in your. That work experience is basically your practice and experience. Here's also it's practice and experience in related field. So what is the related field? You've been practicing your, suppose you did your masters in structure design, and you have 3 years experience in structure design and experience, that's good enough. And your gross receipts of minimum 1 lakh in, I'm wrong here, sorry. This is incorrect. This is 2 of the 3 years. because there's only 3 years experience. This is incorrect. Please, once I share this thing, I will correct it. But don't go by this. Only 2 of the 3 years you are supposed to require to have a gross receipt of minimum 1 lakh. And if you have been in job, then 3 years of job in related field and resigned. In that case, minimum salary of 50,000, which is the same here also. So your minimum salary that you should have drawn from your job, meaning I see it as the max salary that should have happened in that period, but the minimum amount specified is 50,000 rupees. So suppose if you started your job with 20,000 rupees and then slowly it increased to 60,000 rupees when you resigned, that's legal, that's valid, because you had a salary of 50,000 or more as required under this rule. That's my interpretation. You don't have to have a salary of 50,000 for all of those 3 years, but you should have had a salary of 50,000 once by the time you resigned. So you also should have resigned in that case also, because employment is not in employment is not a valid qualification criteria. Now, please understand that there are additional pathways which are available for if you're an ex-government employee or if you're an academician. And I'm not going to those sections because most of the people here may not be, it may not be valid or applicable for you. But if you do fall into those this thing, then please do read the rules again, try and understand them. There are special provisions and it's different criteria for you. Now let's come to Cat 7, and here again there are 3 things: education, experience, and income. If you're a graduate or postgrad, see here again this changes. There it was graduate in related technical field. Here, even if you're a graduate or a postgraduate in related technical field, the experience criteria required is 10 years practice plus experience in related field, and gross receipts of minimum 1 lakh in 3 of the 5 preceding years. Or if you're in job, 10 years experience in your job in related field and resigned, and minimum salary of 50,000 rupees. But if you're a postgraduate in plant and machinery evaluation, then you can have 3 years experience, practice and experience in related field, gross receipt of minimum 1 lakh in 2 of 3 preceding years. Again, this is also wrong. I will correct it. And if you were in job, 3 years job in related field and resigned, or a minimum salary of 50,000 rupees. So slightly different, but not the same, but not very different. Again, there are additional pathways available for government employees and academicians. Specific situations are mentioned there, and those apply. Now, coming to the second rule 248, fee. The value shall not charge anything amount more than. So this is exactly what we have in section of the notification of 2009 of the Wealth Tax Act. The same fees is specified. The older fees was different. This fees is different. 2009, the specification came, and we know this fee structure very well. It's verbatim the same. There's no difference, except that now, again, the sub-rule 2 also says that where 2 or more assets are required to be valued by a registered value or the instance of any accessory, all such assets shall be deemed to constitute a single asset. This is also containing exactly verbatim from the notification of 2009. Third part is where the little difference comes in. The minimum fee has been now raised to 5,000 rupees. If by this calculation, if then coming anything less than 5,000 rupees, you still are eligible for a 5,000 rupee fee. And the fourth sub-rule says that the report shall be in the form 170. Nothing great about it. Form 170 is again online form, and probably we will definitely look at it a little bit. So no major this thing. I personally feel that there's, of course, 5,000 rupees has been changed, shall not exceed. All this we know. Now here, this single asset thing, and so unfortunately there is no mention of travel and out of pocket expenses. There is no mention of GST or other taxes, and I feel that a little more clarity should have been brought in. And single asset, so if there are these are contingent assets, only then they can be seen as a continued this thing. And if they're distinctly separate assets, then obviously you need to charge fees separately and cannot be combined. Because it happens that in my case, I have declined certain assignments, because if I was doing one asset, Vis-a-vis, if I was doing 5 assets, the fee was still coming to be the same virtually, because then it was going into, on the balance of the asset, it was 5%, means 0.05% of the value. So the fees was just not increasing because the first asset itself was taking up so much of value that was reaching the D scale. And in that case, for the rest of the assets, it was just not viable for me to start off with that kind of fees. So such unfortunate situations will come where you have to tell your client that I cannot do it. Or the client may then come back and tell you that, okay, Baba, these are separate assignments. First, you just do one assignment for me, and then you do the second assignment for me, and then you do the third, and then you do the fourth, which is a workaround if you and client both agree and understand that, yes, this is unfair for you. But otherwise, unfortunately, we cannot do much. So sub-rule 249 says a lot of things, but basically, it talks about performance review every 5 years, which I think is a good thing, because the department definitely needs to see that I'm alive and working. So the performance review, and we don't know what will be the format of this performance review, whether we have to apply for a performance review, or will they do it on their own. And if at all they find any inconsistency, they will tell us what will be the format, what will be the modalities of it. We don't know anything at this point in time, but it says that there will be a performance review every 5 years. Against that, section 34AB was for life. And there were certain CCITs who had given this thing for 3 years only, but that was not valid. And the CBDT had also given a directive that such a cap, of course, there was a review condition somewhere, but it was not that unless you go to the department, get a review done, you get removed from the rules. But here there is a specific requirement for performance review every 5 years, and the authority has, again, besides everything else, the authority has powers of discovery and inspection. It has powers of enforcing the attendance of any person, including any officer of a banking company, and examining him on oath, compelling the production of books of account and other documents, and issuing commission. All these powers are given under the section 249. Now, coming to form 169, it's just, I mean, I don't want to go into much of details of it. You can just open up that form and see it. It's a very routine form, except that presently a lot of us are slightly confused about the fact that why is this in the grounds for disqualification, which is part D, section 9.3, sub-rule 9, sub-form 9.3 says whether you are a registered valuer member of a valuer organization registered under the Companies Act, Companies Registered Value and Valuation Rules 2017, yes or no. And then it says name of the valuer organization registered under the company's listing, of which you are a member. So if you say yes, then you have to give the name of the RVO of which you are a member. Now, there comes a problem. This is part of the grounds for disqualification. So, and everybody has to fill that. Since I have to fill this form, even if I'm registered valuer under section 514, I am supposed to fill up this form 169. So I fill up this form. So I come to the sub part which says, am I a part of the RVO? Either I can say yes or no. If I say yes, I have to give the name of the RVO. What information is collected? The only information that is collected is whether I am a member of any RVO or not, and what is the name of that RVO. If I say no, there will be no, then I don't have to fill 9.4. So what is the ground for disqualification? Will I be disqualified if I say yes? Or will I be disqualified if I say no? That clarity is not given. Nowhere in the act, rule, or form is this clarity given, and why is this information being collected? Also, the new rules clearly say that if I'm a registered value under Wealth Tax Act, I just have to apply and the registration will be given if the form is complete. Right? So when I say no and I don't give the name of the thing, my form is complete. Where is the disqualification? There is no disqualification. So it's not required to be a member of the RVO. But it was required for me to declare that I am a Wealth Tax Act registered. Unfortunately, the Form 169 nowhere has that provision. Nowhere am I allowed to give input my Wealth Tax Act number. See, understand that Wealth Tax Act number alone also is not enough. You have to mention the CCIT, because my same number you may have the same number as I have, because we are both under different CCITs, and each CCIT has been giving their own number, and the number does not have that distinct identifier of the particular CCIT. So you also have to mention that detail is not missing from the Form 169, which they need to correct. Hopefully they will do it. And this detail probably is a leftover detail from the old draft rules, which probably needs to be removed, because there it was a requirement that you had to become a valuer member of RBO. Now that requirement has been removed. So this should have been removed in our own opinion, but we don't know. So we'll have to wait till the Form 169 to come online. But besides this, there's only one part, and that is that Form 169 allows to be signed by authorized representative. Now that creates a little doubt that why should my authorized representative be allowed to sign my form? And then in what capacity you are signing? So why should, so is it that partnerships or companies or other entities, LLPs, will be allowed to get registered? So there was that doubt, but government has given a clarification recently, saying that there is no provision. If you read the section 514 along with rule 247, you will understand that requirements are only for the individual, and there is no provision for anybody else other than individuals to be registered, which is the correct position across the world. Even IVS does not recognize anybody else than an individual as a valuer. No entities, no companies, nobody is a registered valuer under the IVS. Earlier, that clarity was not there, but it has been brought in since 2019 IVS. It's already there. 2022, it was very clear. In 2025, no change. The individual only is the valuer. So there is that little amount of discomfort with that authorized representative, but with that clarification that there is no other provision, I think that's okay. We can just overlook that now. Now let's just look at the reporting format quickly as to what has changed between the new Form 170 and this will be the old Form 01 and 07. That's the last section before we close the session, and we'll open it for question answers. Yeah. So let's look at what are the mode. This was physical. The new form is online. Structure, there were separate forms, reporting format for each asset class. Now it's a unified. So within this thing, I can report the land and building and plant and machinery. If I'm registered valuer for both the categories, I can register. I can simply continue and fill up one single form. If there are tangibles and intangibles, and if I'm a registered valuer for all of those, I can simply prepare one single report for all of that. So that's one change that has happened. And that's a logical thing to do if you are doing an online form, because you can keep opening subsections. If you just click on yes, land and building, yes, immobile property, yes, then that form opens up. If you just click no, then that section doesn't open up. All those things are very simple in online forms. So it is understandable to make one single form. Earlier, the identification was only name and value registration number, but now the identification is much more detailed. You have mandatory to declare your PAN, email, mobile number, etc. of both SSC as well as the valuer in the reporting format. Next is asset location. Was very basic. You just had to give text inputs. Now you have to give your geotags as well, which is a very simple, normal this thing. I think we all are already doing it in all our valuation reports, even for the income tax department. At least we do it. We always include the geotags in the report because that helps identify the location very easy. Methodology was open-ended text. You can continue to write anything, but now there's a strict word limits. Somewhere it is 500 words and somewhere there's 1,000 words. And earlier you were not required to give all the documents annexed with this thing. But since now it's an online this thing, you can just keep annexing. The digital document upload is also provided there. Next is occupancy. the earlier form O1 has got a huge detail of occupancy in terms of the rentals and the rent collected and the tenant disputes and tenant how many tenants are there. Now it's highly condensed, and you can just give a basic details, and then you can add supporting documents. Building specifications were very exhaustive in the form O1 annexure, and presently also the annexure continues with similar exhaustive format, which we believe is fine. Unfortunately, it has not undergone changes to reflect the modern complexities of structures. The earlier form O1 also, form was to be signed by the valuer. Unfortunately, now it's allowing an authorized representative also. So that's one area which we are not very understanding, that how can you allow authorized representative to sign a valuation report when in individual capacity I'm preparing the valuation. But that's the provision at this point of time. Formally, probably when the form 07 comes over, 170 comes online, we'll know better. Now, with that, a lot of my friends have been suggesting that since everything is now going to be online, form 169 will be online and form 170 will also be online. If you do not have a digital signature, this is a good time that you must go ahead and get a digital signature. Now, to that, I would say that hold your horses. If you're already using digital signature as on date, that's fine, great, wonderful, no problem. But if you're not using a digital signature, then merely for the purpose of this registration, if you want to go out and get a digital signature, hold your horses. Don't do that today, because in all probability, you'll not need it. Income tax department is already, Indian tech is much advanced compared to anywhere else in the world. And we are already using Aadhaar-based OTPs for authenticating our returns. Income tax department is absolutely comfortable with that, and that's a much more secure way than even a digital signature. And it's all probable that Form 169 will be Aadhaar-based OTPs. Only thing, of course, is required is that your PAN and Aadhaar should be linked, which I don't have to say. We all are already doing that. We are filing our returns, and our PAN is already linked to Aadhaar. So nothing else is further is required, in my opinion. But when the form comes, if at all it specifies, you can then go and get a digital signature. But at this point of time, merely because you want to fill up your form 169 someday, or you don't have to go ahead and buy a digital signature at this point of time, is what I personally feel. With that, we've come to the end of the session. My parting thoughts are that there are several inconsistencies in the rules drafting, and that includes references to wrong sections. Somewhere you will see that it's referring to section 513, where actually there is 513 is just not applicable. It should have written 514. And that's in hundreds of places in the entire rules. I'm just talking of these 4 sections, but the 4 rules, but these are not the only 4 rules. The rules are, it's an exhaustive document, but there are so many mistakes. I don't know why that is the case. So some inconsistencies were there in the draft rules also. More have cropped in the final rules. Some have been removed by the changes that have come, but a lot more have come in now. And I think that's because of the hurried manner in which this document has been prepared. I hope and wonder how it will be corrected, but at this point of time, we have no information. But definitely, government has given a clear indication that whatever is required to be corrected will be done. Now, what will be done, whether it can be actually amended in time enough with sufficient amount of a simple use of AI could have told them where the inconsistencies are. They could have just looked at those inconsistencies and said that, yes, boss, the AI is right. Why am I writing 513? The 513 doesn't talk of the registration. It only talks of the appearance. How can I talk of registration of a valuer and refer to 513? But unfortunately, nobody's found the time, or it's not important enough. I don't know what. Anyways, with that, we come to the end of this session, and I open it for Q&A, if any. I've taken longer, sorry, I've taken a little longer than I was supposed to, but I believe that we started a little late, but all the same, I should have finished 10 minutes in advance, but I don't know, I got carried away. My apologies for that, but I open the grounds now. Over to you, Anbu sir, and anybody who wants to have any questions, please. KSA sir.